this would be negative for everything, including the economy. Bitcoin Intelligence Report, a weekly analysis of the market from economics, liquidity, and on-chain perspectives. So we've launched this very recently, should not be more than 3 months, and having a great time there, navigating the markets and bringing clarity to our readers.
I love that. And there's, because I think there's a big demand for understanding what's going on in Bitcoin. If you're just hodling and you're just like doing it, but I have so many people reach out to me, especially people that are either newer to Bitcoin or people that are not yet into Bitcoin. They're like, oh, like, why did it go down? Like, what happens in in the Bitcoin market? How does this affect the next couple of months or even years? So really cool. And what is kind of like, if you had to summarize what's currently happening, how would you like kind of describe the market right now, and maybe even give a comparison to where we at like a year ago, or like 3/4 of a year ago, something like that, 8 months ago when we recorded last time?
Yeah, so let's see. I mean, this cycle has been very interesting and slightly different from last cycles. Instead of having a massive explosion of 10x, 20x, 50x price rise, we've been having this stop and go system where we get a huge macro event. For example, the approval of ETFs, bringing a lot of excitement and a lot of real money, not just psychological effects, real money flowing in and causing the price to go really, really high. So first time we were slowly coming out of the bear market, and I actually chronicled this. The first steps that took us out of the 20K to 30K to 40K to 50K, all of these were matching positive news about the ETFs. So we initially heard that BlackRock is showing interest. That was a huge change, right? So we were in a world prior to this, we were in a world where SEC was fighting us. We weren't even sure what is legal, what's not. And even before that, questions were like, is this thing is going to be banned? Is this too good to be allowed? So then we got more and more regulatory clarity. As I said, BlackRock and others showed interest. And you can imagine when they actually make those decisions, it's something that has been going on for probably years. And a lot of people are get positioned before BlackRock gets in, or maybe even their own network or their own corporation would begin buying before you actually see things approved, right? So they build a position early on. So that explained why, as we were getting good news, Bitcoin was also rising and rising. And of course, after it got approved, a lot of people were like, this is going to be a sell the news event. I was in the camp that says this is going to be fantastic and it's going to actually keep the price going faster. There would be some sell the news. I think in the first day we got sell the news or a little bit. And then, of course, after that, massive flows into all these ETFs and Bitcoin went up. But then what happened was that it kind of ran ahead of itself. So if you look at a Bitcoin model, we can show them later as well. You would see that we actually overdid it. So let's see if I actually have something. Yeah, the chart I have right now goes. Yeah, actually I do have it. So I don't know. Would you like us to?
Absolutely. You can bring it up. If you can share, you can just put it up.
Okay, so that would be a lot easier if I can show it as I explain. So yeah, basically, if you look at, this is a basic power law model, right? And where my mouse is around where ETFs are being discussed, right? So you see, we, from way undervalued position, we rapidly caught up with the trend. And compared to last cycles, this was a little bit fast. And you see that the rate of change is so fast, and this couldn't really continue. And again, you would expect the market wanting to take a breather, and after that we got a lot of it. Actually, we got 7 months of nothing, right? So towards the end of 2024, we were just slowly bleeding down, and I think we went as low as 55 or something, yeah. So 58 or something, that range, and that was when the market was extremely exhausted after 7 months of bleed. People were losing hope, and this is the place where we were looking at funding rate and a lot of the metrics on chain. They were very, very oversold. Especially, I have a tweet that I think I posted here like a couple of weeks before the actual bottom, and I said funding rate is extremely low. This is a great reversal point. It didn't happen then, but then a couple weeks later it did. So we went back, kind of recovered all those losses, but then we got another huge thing, which was Trump. So once Trump got elected, and it was very clear, you see, this is actually around November, right? Once he got elected, and it was very clear that he's going to be supportive of crypto and all the other crazy news that came with it, you see, we got a parabolic move up, and so we get a huge leg up, and then a slow phase, and then a steady phase. This is a clear sign that the market needs time to absorb all this good news. So we were absorbing it up and down, and then tariffs come along. This is where we actually launched Bitcoin Intelligence, and we were all the time explaining to people that tariffs are going to be negative for the market. So if you again remember, this sounds like ancient history, but if you remember, there was a lot of commentary they were saying tariffs actually going to be fantastic, and they're going to 2x the markets, and everything is going to be great. I was again in the camp that said this would be negative for everything, including the economy and Bitcoin and asset prices, right? However, we had a complete playbook, which was pinned on my Twitter account for months. And the playbook basically was that it will not be bad, it will not be good, it would be a combination. Why? Because we expected Trump doesn't want to crash the economy, right? He wants to move tariffs, but he's extremely incentivized against allowing a crash to happen. So once I ran all the game theory, and also based on the economic logic of how tariffs work, we were totally expecting tariffs to begin hurting the economy. We had a blowout in the bond market, and we had a slowdown in everything, and we had asset prices selling. Money was clearly moving out of the United States. The stocks were selling, bonds were selling, dollar was down, money was leaving. So once things got bad enough, Trump clearly showed leniency and added all those pauses, which actually just ended. And he then came out with another persona. This is actually in one of our articles. Trump has two personas. One is protectionist, one is a capitalist. Capitalist is the bigger one. Protectionist is sort of a tactic. So as soon as the market got really bad, he came out with the protectionist, with the capitalist persona, and clarified that we're not going to be letting the market to tank, and gave all sorts of exceptions and this and that, and deal announcement. It's still going on, a little bit of improvement here and there on the deals, but the important thing is the market got the confidence that they needed. And we began a V-shaped recovery, which is exactly what we predicted. We said there would be a V-shaped recovery, but the thing we didn't get was how fast and how much this will go. I was expecting some recovery, and then a slow progress until we get the rate cuts, but we actually did another full all-time high. Once that happened, again, we put out another report. The title was, I Need to Take a Break. It came out around here. And we basically said that this is too much. I mean, in our playbook, we needed rate cuts to happen. We needed tax cuts bill to pass before we get fully bullish, but price overcorrected to the upside for whatever reason. So we took the risk to be very clear that we need a break. And we actually did, instead of a break, actually we got some mini crash, and then it got bought up bought up very well. And this is where we are. And now, I think 2 weeks ago, we published our another report saying that, I think it was last week, I think, the tax bill is moving well. And then rate cuts are coming, slow, but coming. And we do have positive liquidity regime. The only thing we don't have right now is on-chain demand. So when you analyze the data, you see that long-term holders are selling, but we don't see a lot of excitement still. We actually see decreased volume. We see lower implied volatility in the options. We see lower risk taking in the futures market. So people are still a little bit risk averse. But the good thing about the way we look at the market is we don't just look at on-chain. We also mix it with macro, which frankly, a lot of times macro determines what happens later on-chain. So our macro analysis, to wrap up this long discussion, our macro analysis, and I'll stop this, but I have other charts that we can discuss later. Our macro view is because of tariffs, we've had a pretty significant deleveraging. Lots of people have been liquidated. If you remember, Japan carry trade blew up. Bond trade got in trouble. Many people, go back like 4 or 5 months ago, people were expecting bond rates to go down. Many people got positioned for it. Unfortunately, bond rates actually went up. And when you also look at Bitcoin, all the bubble has been deflated. There is no sign of over leveraging. No sign of leverage is very low. Again, option activity low, trading activity low. So we cleaned everything. The market got cleaned up. Leverage was wiped out, and now we are ready for another push. But we still don't see that on chain. But we do see that in the economic data. So what's happening in the economy? Moving. I think just to summarize it, and we can look at each piece separately, but we're getting a huge amount of additional fiscal deficit, which is bad for the economy, but good for asset prices, right? So a lot of expansion in the money supply because of the tax cuts and the bill that just got passed. Big, beautiful bill. Then we have the Fed that has been resisting the data. They have a lot of rate cuts that they have resisted. So there's a lot more coming. This year, they themselves are projecting 2, but it all depends if the economy is actually hurt because of tariffs. We'll get more. But the important point is rate cuts are resuming as soon as the next Fed meeting, and most likely in September. And once that happens, you're getting fiscal stimulus, you're getting monetary stimulus, and slowly you see that on-chain depression that we see will come back. People begin to feel much more confident to take a position. And but from here to there would be a little bit of volatility as well. We have TGA refill that we have to deal with. But pretty much towards the end of the summer is when all the negative effects of tariffs have been priced in or dealt with through the deals. And then the rest of Trump policies, which are very bullish, they will begin to take effect. So this is a great place to be in. Bitcoin is still near all-time highs, and we have passed one of the worst events of the perhaps this 4-year administration cycle. It's all over. We've had a war between Israel and Iran, which got really scary for the energy market. That also is gone. So lots of bad things are in history, and now we're looking forward to significant expansion of the money supply and liquidity, which will be really, really good for Bitcoin.
That's super interesting. There's a lot in there, but the main thing I'm questioning is kind of what are you looking at when you look at market sentiments, and the buying behavior is also something that I'm really interested in, because it's like 5-10 years ago, the average guy that bought Bitcoin is different than now. We talked about before we recorded about Bitcoin treasury companies. there are just like a lot of different players now in the game than like 5 years ago, 10 years ago in Bitcoin, and with different players, the buying behaviors and maybe the cycles and all those things are kind of also changing with that. How do you look at like what are you really looking at when you look at the market, and how do you look at like just different players? I think you mentioned it in our first episode that the ETF was kind of turning point for Bitcoin and who is in Bitcoin. Now the ETF is out for like 1.5 years in the US. How do you look at that?
Yeah. So the one thing I'll mention is Bitcoin is growing and becoming more mature. And one of the perhaps less positive effects of this is it will be slightly less volatile. So the reason for that is, for every buyer, there would be a lot of other sellers around the world. The market will be much more liquid, and even though people think Bitcoin is an illiquid asset, it could be very liquid as well. It's something you can sell over the weekend. It's something you could take it in self custody, but within a few minutes you could bring it back on the market. So on top of that, you have all sorts of institutions that have ready to spend money. So it's not all self custody black holes, which we like Bitcoin to be in. But the reality is there's massive amounts of coins on exchanges and all sorts of other TradFi vehicles that make the market much more liquid. And this is actually a great thing from a fundamental perspective, but it will also have the effect of making those spikes and God candles that we like to see less likely. The positive side of that is dips will also be bought very well. So Bitcoin really didn't have any business being around 80K when NASDAQ was in free fall after the tariff scare. If this was before, a single tweet from Elon Musk cost us $20,000, I think, in last cycle. But Bitcoin has been extremely resilient. The recent crash was from 111 all-time high back to 100. So only 10K quickly bought up. Now we're back at 108. This is all the effect of the maturity of the market, right? So it's overall it's a really positive outcome, but it will also cause less volatility. And another thing to realize is now it will take a lot more money to move this market, right? We have moved up from, again, 80K to 108 now in a very short amount of time, like it's been 2-3 months, right? So imagine how much money it takes to keep the market up like that. And whenever that happens, you need to give it some time for the market to absorb all that price appreciation.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.